Alright, welcome back. You're watching Buy Now, Sell Now. It is time to take queries. Now, if you are sending us a query for the first time, make sure you send us your name, the name of the stock that you want to know about, and also the time frame. I'll take the first question from Ajay. He's writing in from the Netherlands, and he's got 100 shares of Tanda Platforms at levels of 1,670, which is still an attractive rate, Ashish, based on the fact that it's currently trading at around 1,850. What are the prospects on the fundamentals though? Should he hold on for the long term?
You'll have to just tell me the stock again, please.
Platforms?
Can I have the name of the share, please? Okay. The Tanda Platform I haven't tracked, so I won't be able to comment on it.
Fair enough. I'll come to you on the charts then, Kunal, if you have a view.
Stocks which I recommended, I think earlier as well on BNSN, looks attractive on the charts. I think, the stock is getting into a consolidation on the daily time frame. Last, I think, 1.5 month from November and December start is where the stock had gone into this time-wise correction consolidation for itself. So I think it's a matter of time that the stock would break out yet again on the upside. So if time is not an issue, I believe you should definitely to hold on.
All right, that's the view coming on Tanla Solutions. And this one is also for you, Kunal. I have a feeling I've taken this query, but I'm a bit unsure. Nevertheless, I'll ask it once again. This one is from Abhishek, and he has Tata Tele Maharashtra shares at 100 rupees per share. He wants to know what sort of next targets can he look at. TTML, it is actually soaring. 52-week high is what it's hit, above 200 rupees per share. What are the targets that Abhishek can look at, and do you think it makes sense to stay put for medium to longish term?
Well, I think it's very difficult to try and give a opinion over here because the stock has been hitting circuits, I think consistently over the last, I think, 4-5 months. So for such a kind of a stock where it opens up at circuits and just remains at those levels, it's very difficult to try and look at the technical aspect because the demand supply picture actually doesn't come out. So we can't be able to give a true picture of how the technicals are panning out for stocks, for such kind of stocks. But I think if you bought at 100 odd levels and the stock is at 263, yet again at another upper circuit for itself, all you can, I think a much better strategy is to try and trail your stop losses higher and ensure that you get out when the stock gets into a reversal mode. So you can enjoy the trend so far it lasts, but then be wary of such kind of stocks because when it hits lower circuits, there's possibility that the stock can hit even consistent lower circuits whenever it starts to reverse its trend.
Okay, let's get a view on the cement counters. Then Ashish, we've got a question coming in rather from Tara, and she's asking about the fundamentals of Ultratech and whether it should be the pick from the cement basket, or would you go for something like ACC or indeed one of the other players?
I think Ultratech and Shree Cement are the two absolutely amazing stocks, great wealth creators, and continue to do so. I think cement will continue to do very well as construction activity is really booming, and we are expecting even further boom going forward in this year. So cement is certainly a very important sector to track and have in your portfolio. And Ultratech and Shree Cement are the two best stocks to have. So Ultratech, yes, is a very good idea. I think on any declines should be accumulated, and I think my opinion will continue to create wealth going forward.
Okay, this one also is for you, Ashish, from Natrajan. He has 200 shares of IG Petrochemicals, which is purchased at 601 rupees per share. He wants a long-term outlook on this particular counter. His horizon is 2 to 3 years.
Long-term perspective, this is a good counter again. I think he can continue to hold on. There is no problem. I think the stock is relatively slow moving, but if you are a patient investor with a 2-3 kind of time frame, I think then there is plenty of room on the upside. So stay invested.
It's a strategy-based question, Kunal, and I think from the short-term view, Prashant is looking for a question as to how many stocks is too many. He's got, if he's saying that he's got about 5 lakhs, should he stay with quality or should he look to diversify?
Two parts to the question. First is how many is too many. till the time you are not tired of looking at your screen and your portfolios, and you're okay to manage all your positions at a time when the markets also get into a corrective phase, I think that's the number which you should probably be locking in. So some of them are happy with 5-7 stocks in their portfolio because the extent of time they can devote to each of them in terms of trying to track these stocks regularly, I think it's very less. So I think in that sense, it depends on each individual, trader as well as investor. But I believe closer to 10 to 15 odd stocks on an average should be a good amount of number, because beyond that it'll be just about over diversification, and anything which is less than 5 odd stocks could be significantly under diversified portfolio. The other set of query which you had, Alex, can you actually repeat the second part of the query?
Which is, would you stay with quality at this point, or would you look to diversify across various sectors?
At any point of time, rather not just at this point of time, but I think at any point of time you have to look at stocks more from the quality side. So I think almost 80% of your portfolio has to be parked into good quality stocks, because right now the markets are into a quite a strong euphoric kind of a zone for itself. But when we saw, in fact, last 2 months when the markets were a lot more choppier, I think that was the time when the large cap and the quality stocks, they managed to hold their ground, still outperform the benchmark indices, as well as the high beta names and the penny stocks as such. They went into a very sharp periods of correction. Some of them corrected more than even 50% as well in the last 2-3 months. So you have to, of course, path more towards quality, and it's not just a short-term phenomena which you should be looking at. It's a consistent strategy which you should adopt in every kind of a market scenario.
All right, this next query is from Vijay Lakshmi, and firstly, before I go ahead with the query, congratulations Vijay Lakshmi, and this is because she's holding 200 shares of Maruti Suzuki since its IPO in 2004, and if I'm not mistaken, it had actually listed at around a price of around 125 or 150 rupees per share. So she wants to know how is the future prospects of Maruti Suzuki in light of the EV segment that is coming up. She wants to know whether she should hold on to Maruti Suzuki or look to exit this particular counter. What's your take, Ashish? Since IPO, that's from 2004, she's been holding on to Maruti Suzuki. That stock did hit 10,000 rupees per share a few years ago. So what should she do? Hold on to it. How does Maruti Suzuki look over the longer term?
Well, firstly, very great. I think that's a great story of capital creation. Maruti came at 125 rupees, the IPO price. So from there onwards, I think we have held on. It's been a great capital creating stock. Future still looks good. Still is the clear leader in the passenger car segment, I think. But if you are in particular looking at also the EV story going forward, you could partially book Maruti and also buy Tata Motor DBR. Tata Motor, I think, is doing very well, and I think this time around, it's actually the turnaround is going to be very significant. Usually, Tata Motors has been a very favorite stock in the bull market, and then it kind of turns around and stays negative for many years. But I think this time the turnaround seems to be very real. In particular, their foray into EV, I think, is backed by a very good ecosystem developed around it, in terms of the group companies supplying all kinds of, from chemicals to the batteries to the software needed for an electric vehicle or for any smart new vehicle. So I think Tata Motors also is a good story. I think at this point it would make sense to partially book Maruti. Don't book out completely, partially book and buy Tata Motor DVR. Why Tata Motor DVR? Because the discount to Tata Motor is very significant. And I think as time progresses, this discount should also narrow. So you will get both the benefit of Tata Motors main stock doing well, as well as the discount to Tata Motor DVR getting narrowed. So Tata Motor DVR, I think, can be an interesting second stock which you can have in your portfolio.
Sorry, I'm going to have to request both of you to keep your answers as short as possible. I'm getting a lot of questions here, and it'll be impossible to take even half of them if we go at this pace. I'm going to come to you, Kunal, on Mahindra and Mahindra for the short term. We've got Denny from the UK asking about this. He's got 5,000 at levels of 848. What should his strategy be?
to hold. It's just about that the stock is getting into a slow-paced recovery. It's a matter of time that M&M would probably break past about those 900, 950 hurdles, which was the previous swing high. I would recommend, definitely recommend a hold on M&M and probably try and increase your time horizon. Don't look at this as just an intraday or a short-term kind of a trading play, because the stock really has a lot of potential for itself to even come back to four-digit marks as well.
Okay, this one also is for you, Kunal, and this one is from Santosh. He has 2,250 shares of KPIT Tech, which he's purchased at an average price of 183 rupees per share. He's a long-term investor, so he wants to know, can he accumulate some more at these levels since his average price is already low?
In fact, look out for corrections to try and enter the stock. It's run up quite steeply. RSIs on the daily, weekly, monthly charts are extremely overbought, and that's not a territory where you should be looking to average it out. So you have to wait for corrections at lower levels. Maybe a retracement towards 50 DMA could be a good level where you can look to average it out further.
Okay, Kunal, KPIT Technologies, 500 shares bought at levels of 402. Would you book profits at this juncture or would you wait? Krishna Kumar is asking this question.
Just to maybe book out partial profits and look to buy this back again when the stock comes into the lower end of the price trends for itself. As I said earlier, that possibly many of these IT stocks can get into a phase of correction over the near to medium term. So better strategy would be to try and book out partial profits and buy the stock when it gets into a corrective phase yet again.
Ashish, do you track this counter Indian acrylics? Because Vijaya has about 2,000 shares of Indian acrylics purchased at about 20 rupees per share. For the longer term, what are the prospects for the company? Do you track it?
Yeah, I track it. I think the company is on a turnaround. It's a very good turnaround story. And I think from here onwards, the stock should do well. Of course, it is a small cap, so one has to be careful. If one has that kind of a risk-taking capacity, I think then it is certainly looking very good now. The turnaround is very real, and I think the future prospects look very bright now. So I think the investor can hold on there. He should make profits going forward.
Okay, we've got a question coming from Ranjan, and he says he's Gyan Ranjan Nayak. Kunal, this one's for you. He's bought Tata Power at levels of 229. He's got 500 shares. He's wondering whether to book out at this point or should he hold on?
I think you should hold on. The indicators are just about getting into a reversal mode for Tata Power. Now, I indicated earlier as well a few weeks back that if the stock gets into a corrective phase and especially goes below the 200 mark, that should be a classic level to try and buy or average Tata Power. So I would definitely suggest a hold if your time horizon is medium term to long term, and if in case the stock gets into a wobbly phase and corrects below 200 mark, look to average it out further.
All right, I'll take this one from Dikshita. It's been a while. I know that Dikshita has been posting, not taking her queries for a while. So she wants to know whether Welspun India or any other textile stock can be bought at current levels. What's your take, Kunal?
A lot of textile stocks are looking very attractive. Vardhaman Textile is one of them. Welspun India has been looking very attractive. Raymond is the other stock which has also managed to make a good comeback for itself. So it's a problem of plenty, frankly, for the textile names. But the chart structure looks very, very interesting for many of these stocks in the space. So I think even if you try and pick and choose, say, two of the three names which I mentioned, I think that could be also turn out to be a good sectoral bet on the textile space overall.
Alright, gentlemen, it's time to hit the rapid fire segment. You know what that means. Keep your answers even shorter than you have been keeping right now. Kunal, I'll come to you first. And this is already, I think, a stock that you recommend in the Chartbusters segment. So it's easy. Sudha is asking about Graphite and iShare for 1 year. Should she buy at this point?
I would definitely recommend a buy on both of them, Graphite as well as iShare.
Danny wants to know if Varun Beverages is a buy at current juncture for the medium to long term. What's your take, Ashish?
Yeah, I think it's a good stock. One should go ahead and buy.
Ashish, Radico Khaitan, would you buy at this juncture and how long would you hold it for?
I would buy and I would hold it for a longer period, 3 to 5 years. I think the story is still looking very good.
Alright, Shailaja wants to know whether she can buy Tata Communications at current levels for the short term, Kunal.
Yeah, you can look to buy Tata Communications. The stock has come back to a support point at 1460 odd marks. A good level to try and chip.
Okay, question from Kunal Thakkar from Mumbai. This one's for you, Ashish. He's asking about Motherson Sumi from the Auto Ank Pack. Would you buy into this based on fundamentals?
I would certainly buy into this, but keep in mind it is a little high risk, high return kind of a story. So if you have that kind of temperament for risk, then certainly it is a stock which has a great potential going forward.
Kunal Hanumantaraya Gaurav has 70 shares of Amar Raja Batteries, which he's purchased at 790 rupees per share. He's saying the stock is falling ever since he's bought it. What should he do?
Well, I think you should look to hold on to Amar Raja Battery. The stock is getting to a recovery phase. I would suggest to hold on.
Ashish, if someone's facing a loss of about 20,000 rupees in Paytm, I believe they were allotted about 20 shares at the IPO time. Should they hold on or should they book out?
I think they should book out. There are plenty of better opportunities in the market. So I would say think that book your loss and put your money somewhere else.
Alright, and lastly, this one is from Varun. This one is for you, Kunal. He's bought HDFC AMC 220 shares at the price of 2,895 rupees per share. Wants to know whether he should hold or exit.
Well, I think you should look to average it out further, specifically if the stock comes closer to that 2,350 mark for itself and hold it for at least another 9 to 12 months. I would expect at least a 40 to 50% return from those levels for many of these AMC stocks, including HDFC AMC.
Gentlemen, Ashish as well as Kunal, thank you so much for your patience and your time. Appreciate it. We are slipping into a very short break, but do stay tuned. Lots more coming up on the other side.